Hi guys, it's Nila this side. Just checking the audio. If you can hear me properly, just put OK in the chats. Great, I guess everyone is able to hear me. We'll be just starting very shortly. So in the next 6 days or the crash course, we presume that you've already started with the presentation. You're far enough in the presentations, and as you know, since it's the crash course, we'd be covering the whole course, but we'd be focusing much more on the main points of the whole course, and we'll be attending to your specific doubts as well. So, but obviously, you need to keep in mind that since we're covering the whole course in 6 days, we cannot cover every single aspect of the course in a lot of detail. So we have to stick to the most important parts of the whole syllabus, and we'll make sure we cover everything that you need to know for the exam in a lot of detail. So if you have any specific expectations, if there are any specific topics that you guys are not clear with, please let us know those topics as well. And of course, you have all the online resources available for any doubts that you have that you might encounter later on as well, even after the classes. So we are always open to your queries. So we're just waiting for a few more people to join in, and then we can start with the course. So we'd be doing some tips and tricks from ethics and corporate finance for today. We would be seeing, so you have to understand that ethics is the most important bit of the whole course. So what are the focus areas, what are the main confusions which people have in both ethics and corporate finance? That's what we would be covering in brief today. Throughout the crash course, all the instructors will be giving you specific tips and tricks about where people end up going wrong during the examinations, what are the common point of confusions. So this is what you can focus on. Also, I would recommend that even if you have not had the time to go through the CFA Institute books, at least go through the questions that are there at the end of the book, right, at the end of each chapter. So that's something you should be doing while you're practicing it. So if you're doing everything from Schrazer, it's okay, but at least cover the questions from the CFA Institute books as well. So I'm getting a question about the calculator. So as you guys might be knowing, there are 4 calculator models which are allowed. So you have 2 models from Texas Instruments and 2 from HP. Texas Instrument is the more common one, and you're not allowed to use any other calculator apart from these 4 models from Texas Instruments and HP. So make sure you have these, make sure you have enough practice on these calculators. If you've had some experience with the scientific calculators, it should not be very tough, but make sure you're able to do all the operations. Just don't start with it 2 days before the exam. You should have enough practice on using the calculator. Alright, so another question that I'm getting is regarding can you take 2 calculators instead of changing the battery in the exam? So don't even think about changing the battery in the exam. The calculator is not that user-friendly. You would not have enough time to change the battery in the examinations. And yes, you can take 2 calculators, but obviously it has to be either of the 4 models. So let's say you can take a BA2 Plus and you can take a BA2 Plus Professional. You can get one from another friend of yours who's probably written the exam earlier. So it's perfectly okay to take 2 calculators, but don't think about changing the battery in the exam. You would not have the time to do it. So are we asked to clear the memory of the calculator before? Yes, you are. You have to clear the memory of the calculator before the exam. So, and I would recommend to do that anyways, and I would recommend to clear the memory after every single question that you've done, for the simple reason that if you don't clear the memory, when you move on to the next question, you might end up with figures which you're not expecting, because those have been carried over from the previous question. So as soon as you finish one question, make sure you clear the memory before moving on to the next question. Now, how long do the batteries last? Okay, so that's an interesting question. Personally, I've been using my calculator for, I think, about past 6 years. I've not changed the batteries even once till now, so you should not be really worrying about that. All right. So how do we clear the memory? You have a clear button. So there are two ways that you can clear it. If you're doing the time value of money calculations, there is a clear TVM button there. You can use that. Just above CEC on the last row, there's another clear memory option. So depending on what calculation you're doing, those are the options that you need to use. And I'd strongly recommend that you go through, if you've not got the instruction manual with the calculator, you can download it off the net. It's available freely. So if you're not able to understand a particular calculation, how to basically punch in the calculations, you can just use that instruction manual from Texas Instruments. It's really good. They have given the examples as well. So it's really good to follow. It's very easy to follow. So I'd strongly recommend doing that. Yes, we are going to talk about ethics and corporate finance. Let's start with today's agenda. So we're covering ethics and corporate finance today. I hope you're able to see my screen. So we're just covering the most important tips and tricks effectively. And if anyone is not able to see my screen properly, you should be having the presentation. Let us know. All right. So ethics, as you might be knowing, is the most important bit of the whole course. And it's that important that whatever you do in level 1, a lot of it gets repeated as it is when it comes to ethics in level 2 as well, right? So and the best way to do ethics is from the CFA Institute books. Now this is something which is given by the CFA Institute itself. All the codes, all the standards, the JIPs, everything is coming to you straight from CFA Institute. So it makes sense that you do it directly from the CFA Institute book, right? If you don't have the time to do it, as I said earlier, at least try to do the questions at the back of the CFA Institute book, not just for ethics, but for all the chapters basically. All right. So the first one that we're going to do is you have to start thinking from the point of the CFA Institute itself, right? So essentially, when you're doing ethics, the main challenge that people face is that you have to end up unlearning a lot of stuff that you already know. Because if you use, let's say, your regular chain of thought, your own chain of thought, then you might end up getting the questions incorrect. So when you start with ethics, that's a very common occurrence that you end up getting, let's say, 50 or 60% of the questions incorrect. Because what's expected of you is that you should know how CFA Institute is thinking, and basically you need to get your thinking in sync with the CFA Institute chain of thought, right? Now, coming to the codes and the standards and very specific tips regarding that. So let's say you have a situation where you're subjected to laws of various bodies in various countries. So let's say you're a CFA Institute candidate, you're also appearing for, let's say, FRM, you're working in India, but you're advising clients in, let's say, US. That's a situation where you're subjected to rules and regulations of various countries and various organizations, right? In that case, what you need to remember is you need to follow the most strictest law possible, right? So just to give you an idea, let's say you're a CFA Institute candidate and you're working in Cayman Islands, which has very loose financial regulations, right? So let's say Cayman Islands does not have any rules regarding insider trading. They don't have any issues with insider trading. That still does not mean that you would go ahead and indulge in insider trading, because you're still a CFA Institute candidate, and CFA Institute standards specifically tell you not to indulge in insider trading. So even if, let's say, there are no local rules and regulations, you still have to abide by the CFA Institute codes of conduct and the standards and the professional standards, right? All right. Okay. So next one is about the participation in IPOs. What happens if an IPO is oversubscribed? How do you allocate shares from an oversubscribed IPO to various accounts? Now, always remember, this needs to be done on a pro rata basis. If you, in case you don't know what pro rata means, this basically means, let's say an IPO gets oversubscribed by 10 times, right? Now, in that case, it's not like the best clients or the more, let's say, the H&R, the high net worth clients should be getting a higher share, higher allocation of those shares. everyone should get the proportional shares for which they applied for. So if an IPO is oversubscribed 10 times, everyone should be getting 1/10 of the number of shares that they applied for, right? Even if you have clients which let's say are paying you, let's say more commission, or which are getting a lot of business, still you should not be giving them a preference when it comes to allocation of shares, right? Okay. Next one is about material non-public information, right? Now, what is material non-public information? So non-public part is easy. So non-public just means that the information is not in the public domain, right? Now, if the information is not in the public domain, then you're not allowed to use it normally, right? But here we have to combine it with the condition of materiality. Materiality essentially means that the information would be able to affect the prices in the market, affect the volumes in the market, right? So what kind of information could be called as material? Well, let's say if you have advanced information about the results of a company, some mergers or acquisition that could be taking place, all that can be called as material information, right? So if you have access to material information, material non-public information, then you're not allowed to use it, right? Now, if let's say you're working in a particular company, right, and you know that this company is going to be acquired by another company, or there are talks going on between another company and this company for any merger or any acquisition, then you're privy to that information. You're not supposed to use that information yourself for trading or get someone else to basically use that information either. So it's not only about you using that information, it's also about you passing on that information to someone else, and then these guys are basically getting to use that information, right? So it applies to both. Alright, if let's say the information is material but it's public, then it's not an issue. Then you can go ahead and use it. There's no problem with that. Also, if the information is non-material and non-public, that's okay. So let's say if you get to know that, you know what, your CEO's son is going to study at Harvard, it's okay. I mean, if you want to use for some kind of an analysis, it's okay, because the information is not material, right? It's not going to affect the stock prices as such, right? Okay. Next part is that let's say you're working in a particular company, you decide to quit that company, you've given a notice, so let's say a month or something like that, that you know what, I'm going to quit the company in this much time. Then you cannot take any of the financial models or any documents that you made while you were serving that particular company. Now, whatever you did, you can always say that, you know what, the financial model that I made was from my knowledge, from my expertise, so why cannot I take it? It's a simple thing, right? You would not have made the financial model otherwise. You were paid to create that financial model by the company, right? Hence, that financial model becomes the property of the company, right? So it's not your personal property anymore. You've already been paid for your expertise, for your creativity, whatever you applied, right? Hence, that becomes a company property. It's not your property. You cannot take it to your next job. However, whatever knowledge you have, whatever skills you learned here are perfectly okay to be used in the next job. No one is stopping you from using that. Also, you cannot take any client's non-public contact information. So if you have to contact the clients again, let's say you're in a sales profile, you want to contact your previous client and ask him to, let's say, you know, move to your new company or something like that. It's okay to do it, but only when you've already left the company. You cannot do it while in the notice period. You have to be out of the company before you do that. So once you're out of the company, you can contact that old client again using public records. So let's say you can get the data from LinkedIn or from some other source, and then contact that client and solicit his business. So that's allowed, but you cannot solicit the business of this particular client while you're still in your old job, right? All right. So moving on to the next one, a very common point of confusion is if you're allowed to, let's say, use someone else's research. Okay, so taking this question from Ankit. So in pro rata allocation, is there any specific ratio in which the allocation of shares is done? As you told, 1/10 of the subscribed quantity. So no, it's there is no specific ratio when you talk about pro rata. It's just the total number of times that the IPO has been oversubscribed. So whenever I said 1/10, it was just an example in the sense that if something is oversubscribed by 10 times, everyone will only get, let's say, 1/10 of the shares that they applied for. Similarly, if it's oversubscribed 20 times, then only 1/20th of what they applied for. So pro rata just means a proportional share of what you applied for. That's all it means. So there's no specific ratio. Pro rata is itself specific, basically. All right. So taking this from Barhan, what if you go for a company visit? The information you get from it is material but non-public. Can't you use that information in that case? If the information is material and non-public, you cannot use it. You're not allowed to use it at all, right? So if you use, let's say, the other combinations, the information is material and public, or non-material and public, and all the other combinations that you can have, those are okay to use. Only when it's material and non-public, whatever source you get it from, you're not allowed to use it at all. Whether it's from company visit, whether you heard 2 employees talking in the canteen or anything like that. As soon as it's material, it falls in the domain of material and non-public. You cannot use that information for yourself, or you cannot pass it on to someone else either. All right. Okay, I think, so can the non-public information be used for clients? No, it cannot be. So only if the information is non-material and non-public, it's okay to use it. If it's material information and non-public, you cannot use it for anyone else. As I said, for yourself or for anyone else, you cannot use it. All right. All right. So Umair asked, can you talk about mosaic theory? So mosaic theory essentially means if the information is non-material and it's non-public, there is no issue in using it, right? You're okay to use it. As I said, the only problem would be when it's material and non-public. All the other combinations, there's absolutely no issue. Let me see if I've missed out anything. Any other question? Okay, so I think I've attended to all the questions pretty much. Okay. All right. So now continuing with the next slide. So a lot of people think that, you know what, if you're using a third-party research, then it's not allowed because it's not your own research, right? What you need to keep in mind is that CFA Institute does not bar you from using third-party research, right? It's okay to use third-party research. Only thing is that you have to see how diligent was the analysis. You have to do enough due diligence on this. You're just using that information straight away, whatever the third-party team provides to you, is not sufficient. You have to analyze how rigorous were the assumptions which were used in this analysis, and you have to apply everything that you would apply to your own research. You have to do the same for the third-party research as well. So you have to analyze whatever the underlying assumptions there was, how rigorous was this analysis, and the timeliness of the report, so timeliness of the data. So if you're basing if you have to give a call to the client on a particular stock, and the data that you're using, the input that you're using is 3 years, 4 years old, it's stale data, then it does not make sense, right? You have to analyze the independence and objectivity of this particular research which was done as well. Now, when we say independence and objectivity, so you have to make sure that the research that you're getting has not been copied from another source, it hasn't been plagiarized from another source. So it should be independent. So these are the things which need to be kept in mind when you use any third-party research. All right. Another thing which you need to remember is anything which is related to plagiarism, right? That needs to go into the misrepresentation substandard, which comes under professionalism, right? So people tend to confuse it with integrity of capital markets or the investment, the standard for the investment analysis and the recommendations one. But plagiarism is specifically covered under misrepresentation, right? And plagiarism, as we all know, basically means copying someone else's work. You're using someone else's work without giving them the credit. So if you have to use someone else's work, make sure you give them enough credit. You cite the paper, cite the research from where you've picked it up, right? All right. Another thing which you need to keep in mind when you're doing ethics is that when you're doing it for the first time, you think that there is a lot of overlap between the various standards. So let's say you have a standard which comes under professionalism, which is called misconduct, right? Now, if you think about it, any kind of violation of any code of ethics, any standard of professional conduct could be vaguely called as a misconduct, right? So let's say if you have an instance where someone is cheating in the examination, whether it's CFA examination or some other examination, right? They could be cheating in the examination, they're caught for that. So, of course, cheating in the regular sense of the word is a misconduct. But when you're talking about CFA Code of Ethics and the standards, the rule of thumb is you have to look for the closest possible match for the violation. So when we say the closest possible match, what you need to look for is that if you have a specific standard available for that particular violation, then you need to go with that standard rather than the vague standard. So let's say if you have the example that I gave earlier, that someone has cheated in the CFA examination, then yes, it is a misconduct, but you have a specific standard which covers this conduct, which is standard number 7, which is responsibility as a CFA Institute member, right? So this specifically covers cheating. So instead of marking misconduct, this is the one which you need to go for. Whenever you're answering an ethics question, the first thing you need to determine is whether there is a violation at all, and second, if there is a violation, then of which standard and substandard, right? All right. Next one is fair dealing, so which is the standard 3B. Now, normally the confusion which happens in this point is that whenever you think about fair dealing, right, people tend to associate fair with equality. So when I ask, okay, what is fair dealing? You say, you know what, everyone should be treated equally. Now, that's what you need to keep in mind, that fairly does not mean equally, right? So when I say that, it's okay to have different service levels as long as it's disclosed to all the clients, right? So think about it in this way. So when you talk about, let's say, credit cards, there's a gold card available, a silver card, platinum card, signature card, and so on, right? So everyone knows that there are different service levels available. There are different, obviously, a platinum card holder will be getting a much better service than, let's say, a gold card holder, right? But obviously you need to pay for it, right? You're getting better services, but then you need to pay for it. You need to be eligible for that criteria. So in this case, everyone knows that there are different service levels available. So if you are willing to pay more as the membership fee, let's say every year, then you can go ahead and go to a higher standard. So fairly does not mean equally. All that it means is that even if you have different service levels, all the clients are aware that these are the service levels which are possible, right? Okay. So ethical values are means and not an end. So never judge an ethics case by its outcome. So even if, let's say, the end result that you have is positive, but the means that you've taken is not very ethical, then it still is a violation. All right. So that's about ethics. Let's see. Let's come to the questions that we have. All right, so Golem asks that, do we need to memorize that plagiarism is under 1C? Yes, you need to. So you need to have an idea about the whole tree structure, that this is the standard and these are the substandards which fall within that standard. And ideally, the way I would advise you to do it is you go through what the standard is and you try to remember one small example for every single substandard. So in the crash course, we will be having specific examples as well, small examples for every single substandard. So if you don't remember the example, if you haven't done it well enough, then you might get confused between one standard and the other standard. And that's the exact confusion which the CFA Institute, which the exam basically thrives on, right? So as I said, there are two steps to answering an ethics question. First is to determine whether there's a violation. Second is, if yes, then of which standard. And this is the part which confuses people, right? So if I were to tell you that, you know what, go ahead and mark, instead of one, mark 2 out of the 3 options, you would get 100% of the paper correct, right? So confusion would happen between, always it would happen between 2 of the 3 options, right? So yes, you need to remember the whole structure, that this is the main standard and this is the main, these are the substandards which fall within that particular standard, and one small example for every single substandard. Okay. Okay, so Aditya asked, do we have to learn the substandards? Can't we just learn the concepts behind them? Well, you can learn, you have to do both, right? Because when you get the CFA question, they would specifically ask you, so let's say they could also see with professionalism that is this a violation of standard 1A or is this a violation of standard 1C, let's say, something like that. So you have to remember which substandard goes in which standard. So it's important to learn the name of the substandards and the standards as well as the concept behind that. Alright, so Nitin has asked that can the company use information available about itself while share buyback? Well, the company is already privy the information about itself. Everything about the company is available to the senior management and to the employees. To the employees, basically whatever is required by them, right? So they will be using that information anyways. But let's say they have information, this company has information about some other company which is not there in the public domain, then they cannot use it. But as long as it's using information about themselves, they already have access to that information, so it's not an issue. Everyone knows that any company will have information about itself. Okay, so Ronak asks that the questions are so lengthy that it takes nearly 2 minutes to understand and read. Any other way to deal with it? Well, that is the case with ethics. It's still much better in level 1, to be honest. When you go on to level 2, you have cases, and you would feel that what you're doing in level 1 was just so much easier when you get to level 2. So yes, it does take time to read through it. I always recommend that you start with the ethics bit in the whole paper. Now the reason for that is, of course, I mean, it's a personal decision, but the reason for that is you're starting with a fresh mind, and normally people end up taking ethics for granted, that, you know what, it's a theory section, so we can do it right at the end. So when you're finished with all the other sections, you're just rushing for time. You don't have enough time left. You might not be able to read the question properly, and you would miss out on a lot of things, right? So it's better that start with ethics with a fresh mind. Yes, I understand it's theory, I understand it's boring, but the rule of thumb with CFA is the more boring the thing is, the more important it is from an exam perspective. So unfortunately, you need to deal with it, and you do need to read the question properly only, and sometimes reread it as well, right? Because ethics is a very tricky area. The problem with ethics is, I would say, in one sense, it's the easiest bit of the whole course. In another sense, it's actually the toughest bit of the whole course. Easiest, it's not too tough to go through the whole content, right? The content itself is not tough. The problem is the application of that content. So for any other area of the course, let's say corporate finance or let's say quant or anything, you have, let's say, a formula, you know there could be only one correct answer. So if you get something else, then it's wrong. When it comes to ethics, you're still not sure, even once you're done with the paper, you're still not sure, okay, you know what I marked, was it correct or not? There's no sure shot way of telling that, yes, this has to be the best answer, like it's the case with the other sections. So yes, it is a very tricky topic, and don't leave ethics for the end. Most people do that mistake, that they leave ethics for the end. Don't do that. Do it towards the beginning, so you have an idea, and try out a few questions, because that's the only way that you'd understand, how tricky it is. Alright, so Ivan basically says, do you have a tip about the order in which the sections should be tackled? Let's say first the ones which have the highest weights, or in some other order. I would say, I mean, the way I would have done it, I would just do it normally, just section by section. I wouldn't really go back and forth. Only thing I would do is, if I'm not sure about a question, I would not spend too much time on it. You can always come back to a question later on, but don't think about that, if it's the highest weight, then I'll go for this one first. Of course, everything still comes down to your personal approach to it, but had it been me, I would always do ethics first, and then move on to the other questions, other sections sequentially. I would not have any other preference otherwise. The only thing is ethics should be done first. All right. So Dragos asks, are portfolio managers allowed to participate in oversubscribed IPOs? Now, portfolio managers, again, there is a standard which relates to priority of transactions. So we need to go through that standard, and basically the personal accounts come right at the end. The first is always the client. The transactions should always be executed for the client first, then it's for your employer, for the company, and right at the end is you. So that's the sequence which you need to take. All right. So that was about ethics. Let's move on to the corporate finance bit now. So the first thing that you need to remember, as I mentioned during the start of the session, that you should be very familiar with the calculator, right? So, I mean, just to give you an idea, if you were doing a present value, future value calculation, you should be on a level that it shouldn't take you more than 4 to 5 seconds to do that calculation. Once you reach that level, then you should be happy with it, that you know what, it's okay. But practice as many questions as you can. Normally the tendency is, as soon as you see a numerical part in, let's say, Shweza or the CFA Institute book, instead, since it's already done for you in the book, you don't pick up the calculator and just you say, you know what, you'll do it at the end, it's just the same methodology. So do that. Make sure you practice, when you practice it in the question, you use the calculator and then do it accordingly. Now, another thing which you need to remember is that in case you're using, let's say, the BA2 Plus from Texas Instruments, you have two models available from Texas Instruments, so BA2 Plus and BA2 Plus Professional, right? There is a topic on payback period and discounted payback period, PB and DPP. Now, these are the calculations which are available on the BA2 Plus Professional, but it's not there on the BA2 Plus. So you need to learn, in case you're using BA2 Plus, you need to be very sure that you know how to calculate these manually as well, in case it's asked in the exam. So when you're using BA2 Plus Professional, the payback period and discounted payback period appear right after NPV and IRR. If you keep pressing the down arrow, you would see the payback and discounted payback period. It's not too tough even to do it manually, so it should not be an issue anyways. All right. So corporate finance, the module as such, is very closely linked to equity, FRA, ethics, and fixed income, right? So when you're doing it from an examination perspective, it's better that you've gone through equity, fixed income, and FRA first, and then you go on to corporate finance. It's just easier. It saves a lot of time. So let's say there are topics where you have the capital asset pricing model, or let's say the dividend discount models. All of this you've already covered in other sections. You already know these sections in a lot of details if you've done equity, FRA, and fixed income and all. So it just makes your task a lot more easier. So before corporate finance, I would recommend that you do the other bits of the course, the ones I've listed here. It's just going to make your life easier. All right. So project evaluation, the techniques which you need to use, you have NPV, you have IRR. Both approaches basically are based on your cash inflows and your cash outflows, a comparison of those. And IRR, as you might be knowing, is the value of R, which gives basically the NPV as 0, right? What you need to remember is NPV is the superior approach, right? If there is a conflict between NPV and IRR, which happens typically when there's, let's say, an unconventional cash flow, the signs keep switching from minus plus, and so on. There could be cases where you could have multiple IRR, anything like that. Always go for NPV. Whenever there's a conflict between NPV and IRR, go with NPV. That's the one you need to go for. All right. So when you're calculating cost of capital, you have to remember the WACC formula, the weighted average cost of capital formula, very well, right? It's a fairly straightforward formula. You take the cost of equity, debt, preferred, all of them. The only trick there being, when you're using the cost of debt, you have to take the after-tax cost of debt, right? Because, as you know, there is a tax shield which is there for debt. So interest which is paid on debt is tax deductible. So effectively, the ROE that you get right at the end increases because of that. So whenever you're calculating WACC, remember to take the after-tax cost of debt. Another thing which you need to remember in case of a numerical, right, is that the question that you get in the exam, right, just pay attention to that, because what it might say is that it could be giving you after-tax cost of debt and the tax rate as well separately. That's just to confuse you, right? So if you're already given the after-tax cost of debt, take it as it is. Don't multiply it with 1 minus t further. The t figure which is given to you is just there to confuse you. If you're already given after-tax cost of debt, one step of the calculation is already done for you, right? So it has saved you time. So pay attention to what is given in the question, right? Moving on to the next one. How do you treat flotation costs? So flotation costs, as you might be aware, are the costs that you incur when you, let's say, floating equity. So whatever you have to pay, on the marketing side, on the pay to the investment bankers. So if any of you are planning to go into investment banking, basically this is where you get your bonuses from, right? So how do you treat these? Basically, there are two approaches that you can use. Either you can add them to the initial project cost, or you can add them to the cost of capital, right? So it's better to add it to the initial project cost, right? So go for this approach rather than adding it to the cost of capital. This makes more sense because it's a one-time cost. You're not floating your equity every single day, right? Or every single year. So it makes more sense, since it's a one-time cost, you add it to the initial outflow, the C0 figure, you add it to that rather than increasing the cost of capital forever, right? Okay. Then let's just do the slide and then we go to all the questions, we take up all the questions. Then there is a topic on country risk premium. So you have basically country risk premium is what is the premium that you would have to account for when you're investing in some other country apart from your own country, right? So let's say we have a developing country and your country is the one which is developed. You have two different markets. So you find out the sovereign yield spread basically is the difference in the sovereign debts between the developing and the developed country. So you multiply this with the standard deviation of the equity index of the developing country and divide it by the standard deviation of sovereign bonds in the developed market currency. Now, we know the capital asset pricing model. The normal formula is you add the risk-free rate to beta times the market risk premium. So when you have a country risk premium element, you add the country risk premium to the market risk premium. So that's the way the CAPM formula gets revised, right? All right. One thing that you need to remember is that, you know what, whenever you're calculating, let's say you have a calculation where you have to value, you have to find out the present value, you have to find out the future value, any questions like that. Those are okay to do, but CFA Institute will typically not give you the questions in straightforward format. So it could be that you're given the present value and you're given the future value. Given both of them, you need to calculate, let's say, the interest rate, right? So obviously, if you're familiar with the calculator, you do it in the regular way. Instead of computing, let's say, PV, you do use I by Y to get the answer. The only thing you need to keep in mind is that the present value and future value should have opposite signs. So in the future, if you're receiving money, that's positive. But for that, you need to pay right now from your own pocket. So money is going out from your pocket. That means the PV should be negative. In case you put both PV and FV as positive, and you can try it out, you would get error 7 on the calculator, right? So as soon as you see error 7 on the calculator for any calculation, not just in corporate finance, but let's say even for fixed income when you're trying to value a bond, as soon as you see error 7, it would be because of this, because you would have put present value and future value both as the same sign. So next one is, so don't get confused between opportunity costs and sunk costs. Both are fundamentally very, very different, right? Now, sunk costs are something which basically, you know, you have to take up whether or not you go for the project. These costs will still be incurred. So let's say you're deciding, you know what, there's a particular project in your mind and you want to go for it, but before going for it, you want to get a market research done about the demand for that particular product or that particular service, right? So the fees that you would be paying to the market research company, that becomes a sunk cost, right? So whether or not you go ahead with that project, this fees which is paid to the market research company is already gone, right? That's sunk cost, right? So those don't have to be used for the capital budgeting decisions. When you talk about opportunity cost is essentially the cost for the next best alternative. So this basically means, let's say you have an option to go between project A and project B, right? If you decide to go for the project A, you are losing out revenue from project B, right? So that becomes your opportunity cost. That's the cost, that's the revenue that which you have lost out on, right? So opportunity costs have to be taken into account. You want to go for the most profitable project, right? So whatever you're losing out from the next project, that has to be taken into account. So opportunity costs have to be considered and sunk costs are not considered. All right. So next one is the operating and financial leverage. So these are the formulas and the break-even point. You need to use these formulas a lot. Make sure you remember the formulas. You need to remember the degree of total leverage formula as well. And when we say degree of total leverage, just remember, yes, it is the product of operating and financial leverage. It's okay to solve it in that way, but you should remember the standalone formula for the degree of total leverage as well, right? It's not necessary that you would be giving the data for both operating and financial leverage. So remember to learn the standalone formula as well, right? And similarly, you should expect 1 to 2 questions on the DDM formula, but DDM you would have done enough in equity as well, so it would not be a problem. As I said, try to do corporate finance once you're done with equity, fixed income, and FRA. It would just make it a lot easier. All right, so we're done with the slides. Let's see what the questions are. Let's cover the questions. Okay, so Aditya asks, what's the formula for sovereign yield spread? So Aditya, whenever you have the word sovereign in any kind of yields, so whenever you have sovereign, just think about government, right? Think about government, think about treasury, think about RBI, whatever central bank is there. So if whether it's sovereign risk, sovereign spread, whatever it is. So when we're talking about the sovereign yield spread, you're looking at the difference which exists in sovereign bonds between the developing country and the developed country. So a developing country would typically have a higher yield than a developed country because it's perceived to have more risk. It's perceived to be riskier. If something is riskier, you need to give more return on it, right? So that yield would typically be higher. So you find out the difference between the government bond yields between a developing country and a developed country, and that is the sovereign yields. All right, so Darpan asked why country risk premium is added to revised CAPM. All right, so typically when you're using CAPM, you're using it for domestic purposes within, let's say, investing within your country, right? But let's say there is an investor in US who wants to invest in India. Now, you cannot account for the additional risk which is perceived to be there when you're investing in India, let's say, by taking the typical CAPM formula. We don't have any factors there. So what we can do is we can include the country risk premium to account for that factor. There are several even more advanced formulas available which you're not doing right now. You can create a multi-factor model as well where you can put in even more risk factors. So you can create a much better, much more advanced model, and that's how it's practically done in order to account for the additional risks that are there with investing in other countries. Okay, can you explain the term never judge an ethics case by its outcome with example? Okay, so when we say never judge an ethics case by its outcome, it basically means, let's say even if the outcome is correct, right? So let's say there was a particular policy violation within a company. You get to know, let's say that, you know what, your CEO is embezzling money, right? Now there is a proper chain which you need to take. As let's say if you get to know that your CEO is embezzling money, instead of going to your compliance department, instead of going to the resources which are already available to you within the company, you decide, you know what, let me sensationalize the matter. Let me go to the news channels directly. Let's go to the media directly, right? So you go to the media directly and say that, you know what, my CEO is doing this, and these are the financial records and this, and you make all the information which was confidential to the company, you make it publicly available to the media, right? Now, what you intended to do was okay, right? Whatever you did was there to protect the interest of investors in that company. So the end you were targeting was okay, but the means that you took were not correct. Instead, you should have gone to the compliance and legal department within your company first. You should have checked whether you need to make the documents public, and then gone ahead, whatever they would have advised you, you should have taken that approach rather than just putting all the documents out there for everyone in the public eye. So it's not only the end. Whatever means you're taking, whatever steps you're taking should be done as per the codes and standards. Okay, so Jugal asks, in country risk premium, can we be asked to calculate the standard deviation of equity index or sovereign bond? So Jugal, which not just for this, but for any formula throughout the whole course, uh, you can solve anything as long as you have one thing unknown and everything else is known. You can always rearrange the whole equation. So you can be asked for anything pretty much, right? As long as only one thing is unknown, uh, you just rearrange the whole equation and you get the correct answer. So yes, not just in this, but any formula throughout the whole course. It's not necessary that you can be asked only for the thing which is it's given for. You can be asked for any of the variable which is there in the whole equation. Okay. So Govind asks, what is the minimum score for passing? All right. So Govind, there's nothing like a minimum score for passing. If I'm not sure if you've seen how the questions, how the final markings are given in your results. The way it's done is you're given your marks in 3 different slabs. So one is less than 50, another is 50 to 70, and then you have more than 70. So these are the 3 blocks in which you get your marks, right? Now, everything is done, on on basis of percentile as well. So there's no minimum score as such, right? It's dependent upon the whole pool of candidates which are there, and CFA Institute does not disclose the marking policy every year or something like that. They don't make it public. So the best shot that you have at the exam is to try to do the best that you can. Don't worry about the minimum scores for passing. Just do the best that you can, basically. Okay. So Vishal asks, could you please elaborate on the revised CAPM formula? What is E and what is CRP? So CRP is basically the country risk premium. So this part. So the CRP that you see here is just this, right? And the E is basically for expected. So expected return on the market is what you get, right? So that's what the E is for. Pooja, so how can we take the particular calculator? I guess what you're asking is, as I understand, where can you get the calculator from probably? I think that's what your question is. I think it's available on online as well. I think it's available on Flipkart or on Amazon as well. So it's quite widely available online. So wherever you are, you can order it online as well. So Gurnur asked, how important is JIPS and how to study for it? Okay, so JIPS is very important. So JIPS is giving you the rules of how you basically present your performance. So what you need to remember is JIPS is not mandatory, it's optional. It's like a quality standard, right? So when you're talking about JIPS, I would say from an examination perspective, you have more surety in answering the JIPS questions, right? Whenever you're answering the JIPS questions, you have a whole set of guidelines, set of rules which have been given to you. You just have to check whether those rules have been violated as such or not, and most of the rules are fairly, let's say, quantitative, right? So it's much easier, in my opinion, it's slightly easier to answer the JIPS questions as compared to the standards question. So in standards, you have to understand everything from the CFA Institute's chain of thought, basically, their way of thinking. When it comes to JIPS, you're given a set of rules. So it's like, let's say, FRA, right? So you have a set of rules and you have to comply with those set of rules. Akhila asked, when we are aware of a violation of policy by an employee of the company, when do we approach the compliance department or disassociate yourself from the activity? Okay. So if you know something is not correct, whatever activity is happening is not correct, you need to disassociate from it. So CFA Institute says that if you don't disassociate from that activity, then you're seen to be as part of that activity. So if you know it's not correct, if you know it's unethical, if it's illegal, you need to make sure that you disassociate yourself from that activity. Now, then you approach the compliance department. You approach the compliance department, they would get you in touch with the legal team as well if required, and they will start an inquiry from their end, right? If you see that, you know what, no one is able to help you, the activity is still going on, no one is paying heed to whatever you're saying, then in the extreme case, you need to quit that company, right? So you need to get out of that company in the extreme case. So Shine asked, what is GIPS? GIPS is Global Investment Performance Standards. That's the second bit of the whole course. So once you've done the Code of Ethics and the Standards of Professional Conduct, then you go on to GIPS, which is basically a set of standards which have been laid out to basically present your performance, right? So that's GIPS. So I think we're done now, taken most of the questions. So if you have any more questions, feel free to reach out to us.
Yeah, hi Nilay. That was a very informative session. Just as a feedback, we would like to take a small poll from you. So friends, please do reply to this poll. And while the poll is being conducted, would you like to take a few more minutes to take any other question in case there is? Because I believe we did start a little late. Just so you all know, thank you for registering, and since you're following this webinar, you'll all be sent a mail of the link of the recording of this webinar and also a link to the slides of this webinar, so that will be taken care of. Hope to see you tomorrow in another webinar, and now Nilay will take care of the rest of the questions that he needs to answer. Thank you everyone, thank you for the poll. Nitin has a question. He says, how many questions on GIPS? So would you like to answer that, Nilay?
So Nitin, you're not given the topic-wise breakup when it comes to any module. You only know how much is dedicated to the whole section. You're not topic-wise breakup, but typically you can take it to be about 25 to 30%, something like that. But obviously, it's not guaranteed.
Okay, I think that brings us to the end of the session. For everyone else, you can simply mail questions to yashu@eneev.com. That's yashu@eneev.com. And for those who have registered through Yashu's login details, you can simply register on www.edupristine.com/webinars. That's WEBINARS followed by /. There you'll have this webinar. You can simply register for this and attend the rest of them. Thank you everyone for attending.